The precious metal markets were a slaughterhouse today, with silver taking the brunt of the pain. We're going to discuss what happened with silver specifically today and why it got hit the hardest of all the precious metals. Let's talk about it as we explore. As expected, or as I predicted, the silver price got hammered hard after we found out that silver and gold were not a part of the tariffs. In fact, the word used was bullion. I'm going to be referencing a piece here from Adrian Ash that just discusses what happened here today. But really, in a sense, this is something that I figured would occur after we found out the details of the tariffs. Gold and silver prices tumbled. Silver got hit the hardest Thursday after the safe haven metals spiked to yet another new record high for gold, but industrial commodities fell on President Trump's announcement of massive trade tariffs across the rest of the world, but with an exemption for bullion. And really, that doesn't surprise me either, because it is a little bit of a different animal for bullion. And of course, this way, silver was treated in terms of trade as a precious metal rather than as an industrial metal. So that was a little bit of a surprise, because more than 50% of silver's uses of the silver supply is designated as industrial, because there's over 10,000 uses for silver. Make no mistake, though, there will be an impact down the line here. Before we get into this too deeply, though, let me tell you what the markets are doing right now, moments before they close. Gold is down only 0.81%, down $25.40 to $3,109.80. Platinum and palladium both got hit hard today. Platinum is down $25 to $955 an ounce. Palladium fell 5% today, down $48 to below platinum right now. Rhodium fell over 5.5%, down $300 today to $5,800. But silver fell over 6% today. In fact, it was over 7% earlier in the day to $2.08, with the market starting out at $34, and then it got down as low as $31.64. It is now resting at $31.87. If you're going to buy silver, I think today might be the day to do it. And if you do, search around for the best deal. Consider some metals if you're going to make a purchase, but I always say it's good to buy in the dips, as many of you do as well. This helps your dollar cost average. Now, very rarely do I make this suggestion, by the way, to buy precious metals, especially with what happened today. But this is a knee-jerk reaction. This is a psychological, response to what happened with these tariffs. Summit Metals is a place to go to check for those best deals. They have really good deals on Eagles, on Maple Leafs, and other silver products, bars as well. So check them out as you're searching around to buy precious metals. I'll get into more details about why I'm making that suggestion, because I don't do it lightly. Even with the sponsorship, I always feel people should be responsible and shop around before they buy, but they shouldn't buy just to buy either. But nonetheless, let's get into exactly what's happening here. We saw this exemption that has crushed the price gap between the New York COMEX futures and the London bullion market. That's a gap which, in anticipation of trade duty perhaps being levied on bars and ingots, had sucked a record quantity of precious metals into the U.S. Will that gold and silver go back to London? And it's quite possible that it could. We saw that gold had peaked 31 to 31.67 per troy ounce during an early Asian hours, and there was a lot of uncertainty there, and then obviously we saw it drop. Still above $3,100 right now. Silver prices sank by over 6%. In fact, it was close to about 6.8% as of the writing of this piece, falling through $32 an ounce for the first time in almost a month, before rallying 30 cents to 32.15, and now it is sitting at 31.87, so it's pulled back even more. Silver sank even as the U.S. dollar itself plunged more than 2% against rich world other leading currencies hitting a 6-month low on the dollar index. That put the price of silver, which finds almost 60% of its annual end-use demand from industrial and technological applications, down to 9-week lows in UK pounds and euros, sinking to the middle of its past 12 months trading range. Trade policy uncertainty has spiked and it has peaked. And so, therefore, we are now left ourselves with in the wake of this and how it's going to impact. The dollar index, as I record this video right now, indeed is down over 1%. So the dollar has weakened. Usually that means gold and silver are going to climb. And that very well could have an impact, and we could see silver start to recover. Gold, I think, to some degree has, because it got down to as low as $3,050. It is starting to recover a bit more now. Silver very well could follow. That is a big drop in the dollar index. But right now, it is all reaction to the tariffs. And just as I said about the prices going up and that psychological impact with the movement up to the upside, has just as much of an impact to the downside. But remember, folks, I've always said that in this day and age, with what's going on with the psychology of the markets, extremely powerful natural market force is emotion driving, much more so than manipulation. The biggest manipulator, by the way, is the Federal Reserve itself. They want to stabilize the dollar. They want to keep silver and gold down more than any other institution out there. They're the biggest suppressive force. Yea, though, there are the manipulative forces that can move in either direction based off of the selfish nature of the manipulators. Notwithstanding, we also saw a massive downside for the Dow Jones Industrial Average and the NASDAQ as well, too. They got pummeled hard, but silver got hit the hardest here, down over 6%. So, wow, Liberation Day. And this is part of what kind of we can expect here as we go through this shock and awe with these tariffs. And, you can debate on whether you think it's good or bad. Certainly, there will be an adjustment period. That adjustment period may not bode so well for silver, although I still think there's more that's going to keep it buoyed up above $30 an ounce. I really do think that we're done with the mid-20s range, I think, for silver. Although it could fall below 30, I don't think it will be for very long, but I could be wrong on that. But so far with this movement down, that was kind of what I thought would happen. So we'll see. Now, as for the flood of gold and silver into the New York warehouses, there's too much metal sitting in New York, given the weak local demand and the low probability of direct precious metal tariffs. The U.S. is saturated at the expense of tighter markets in UK and Europe. Now, for gold, there's an argument there as to whether some of that will be used for the Sovereign Wealth Fund. I don't know. We'll see what happens there. But silver, more likely some of that will probably go back into the London market because it is under the most stress. And COMEX-approved warehouses now hold well over 4 years of total U.S. gold demand, 2.5 times the quantity held on the eve of Trump's second election victory, plus 4 years of U.S. industrial silver demand, up by 80% since the start of November. And the arbitrage offered by COMEX's gold June contract over London bullion quotes sank as low as $20 per troy ounce, down by 2/3 from Wednesday's peaks. The COMEX silver for May's settlement, meantime, sank to just 20 cents per ounce above the London market, slashing the gross incentive for sailing or even flying the bulkier precious metal west across the Atlantic from around $1 per ounce ahead of Trump's exemption of bullion, a level which dealers had also begun locking in profit by settling physical deliveries onto buyers of COMEX futures contracts. The Mexico and Canada exemptions under the erstwhile USMCA remained in place, says Rana O'Connell, a brokerage at StoneX, also taking tension out of silver after more industrial use precious metal showed signs of tight availability in London. So I think we're going to see things normalize here, but do not sell silver short. And I got to tell myself that too. I still think that we're going to see $36 silver by the end of the year. We're further away from it now, but I think it's still coming. I think there's a lot of things that are going to be good for silver in the coming months. But I think for now, we're going to probably start to see what I had predicted earlier on, a stagnant period for silver, probably in the lower 30 range, where it is now, or maybe even a little bit lower for a time. We may see a dip below 30, but I don't think it's going to last too long. But it's a matter of just hanging in there with silver. There's a lot that affects it, and very dramatically. So in a sense, I'm not surprised that it fell the most, because of the hype around it in many different directions. The silver squeeze obviously failed dramatically. But those of you who bought during the silver squeeze on March 31st, hang on to your silver. Do not let go. Do not get discouraged. As I try to be as realistic as I can about silver, and that's what I do in this channel, as well as bringing you the latest news and analysis in the world of precious metals. And with silver, we have to have diamond hands, and we have to keep our heads up high and understand that the natural market is going to do its thing. But when you take into account dollar cost averaging, especially taking advantage of the dips like today, this is a good day to buy silver, because yes, it could continue to fall even after a 6% drop, but more than likely this is the beginning of, or the overreaction. In other words, I think we're going to see a recovery period that comes from this. And so therefore, I think it's a good time to consider a dip, or consider a buy on the dip. But whenever you make a purchase, no matter when, you should always expect the worst case outcome upon making such a purchase, including from the sponsor of the channel, Summit Metals. Because when you make that purchase, I would almost expect and prepare yourselves psychologically that the price is going to fall even more. Do not be discouraged if that happens either, because at least you are getting some on a dip, and you're going to account for your dollar cost average in the long run. Because in the long run, it's about wealth preservation, and that's it. Protecting yourself against inflation, stagflation, and yes, even deflation, so that you can have something that's a store of value, a store of wealth outside of the system, and a hedge against all of that, including economic instability. That's what it's about when you're stacking silver. So hold on, stack on, and in a case like today, based off of your own level of understanding, it might not be a bad time to grab a few ounces if you can. So there you have it. Let me know what your thoughts are in the comment section down below. Hope you found this video informative, insightful, and educational. Would like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.